All right, welcome to an end of week remarks video. Hope you all have been well this week. Yes, again, all red, no blue this week. We are down 2,700 USD. And yeah, let's just go over the losses. And in the end, I'll just go over all of the mess that I've created since the last 2 weeks. So the first trade we'll take up is Ethereum because it was our first trade of the week. Not of the week, actually. We took this trade on Saturday, right? Uh, so if you look at the trade, the idea was based off of the trap traders on Ichimoku. So we have that Ichimoku there, and let's have a look at the daily Ichimoku. Okay. So the whole idea was that traders down there, right? Any trader or any seller down there has been trapped because again we were in an uptrend, the market was consolidating and quickly broke down below the range low. So we said that any seller below the Kumo is a trapped seller and the market's probably going to reverse to the other side. You can see that's not what happened. And upon this break, upon this daily break is where I have cut my long. Okay. The entry was quite simple. We entered a pullback below the red. So the trade looked like this. There it is. So the trade looked like this. So that was our entry. Okay, on Saturday. That was the stop. And that was the target. So you can see that the trade has not yet been stopped out. Yet I stopped out the trade. Because again, we were invalidated. If we are saying that below this level, right below the last month's low, are trapped sellers, then why does the market need to visit again and again and again to let the trapped sellers close their position? Doesn't seem very right to me. Okay. Now I could be wrong and the market could just reverse and go up from here, which is fine. In that case, we'll act upon the triggers if we have any. Okay. But for now, the whole idea of that uh, long was completely invalidated by the market itself. So we just gave up on the trade. Ended up closing there. Okay, so minus zero point 0.4 R on this one. Not good, but again, it is what it is. It is the market. Okay. Moving on to the next trade. The next one. Okay, let's take from there. So it's German 30. So let's have a look at the German index then. If you remember, we have done the exact same mistake on German index which we did last week. So last week, what we tried to do was we tried to predict a higher low in there, right? A daily higher low in there, and the market making a daily higher high, or at least visiting its, previous all-time high. It didn't, right? Went down, stopped us out, and even made a lower low afterwards. Okay, this week what happens? This week the market opens, right? It goes bullish, high high there, high high, high high, high high, right? Multiple series of high highs. If you look at the minute 30, you still do have a high high there, and there. So I said, you know what? Maybe that was a stretch down, right? That was a bit of a, stretch beyond what the traders wanted. And now it's going to go up, deviate and go up. And that was my final trigger, which is when I got long at that low sweep and had my stops in there and I got taken out. So the trade looked like this. Trade looked like this. Target was there as first target, second target maybe up there. Maybe. Didn't work out and failed. I'll go over these trades again and I'll say why these trades are actually very, very poor quality trades, right? Very, very poor quality trades. But then first, let's just quickly be done with this. So after German, we have the oil. So oil. Where's oil? There it is. Okay, it's a bit of a shame on oil. So on oil, the triggers were fantastic, and the target actually was fetched from the Ichimoku. So if we look at Ichimoku on oil, we have these two key levels there, which have been acting as a magnet to price and have been calling price down. And the market did visit these levels, even went beyond them, right? So Where did we go wrong? Nothing. Oil was just the market taking us out and then going to the target. So we got filled there, right? A sweep of that high was our fill, and we were expecting the high of the week or the provisional high of the week, right? This is the weekly open. So that becomes the provisional high of the week. We were expecting the provisional high of the week to hold. So we gave it a bit of a buffer. We actually gave it quite a lot of buffer. And that was our target. This is the 1.2x extension of the previous week. Since we had a break below the previous week's low, the target is 1.2x extension, right? Fairly standard stuff at this point in time because, again, I only trade this setup. So yes, the market took us out. It went way above the provisional high of the week and then it went to target. In this case, I cannot do anything. Could I have had a better entry? Yes. Yes, I could have had a better entry. I could have treated oil like indices. So on indices, what I do is I go 50% beyond my standard entry. So if this is my standard entry, okay, 50% beyond that actually goes there, okay, and the stops also extend in the same manner. So I might go for a stops somewhere in there, okay, not like 610 as it's in there, but at least I might go like for 5.5, okay, and similar target. So 3.7R would have worked out very, very well. Would have netted us almost 1.5% on the account. We didn't plan it that way. We planned it in a very standard way. Maybe it's our fault. But then I don't know what the market's trying to do. Okay. I don't know what the market's trying to do when it has made low highs, low lows, low highs, low lows, and then it comes back all the way up, starts a new trend, and then drops off. So again, market being the market, and partly my fault as well. Should have treated oil like indices. The next trade, Euro GBP. Lovely. At this point in time, I think Euro GBP is probably our worst asset. So the idea on Euro GBP was very, very not simple actually. It's not a simple idea. A lot of work went into that. So if you look at the H4, the market has been trending down since last week. Upon the weekly open, we have a touchdown of the last week's low. Then we have a news event. Okay. Then we have a news event. The market comes in, retest that high. High, low, high, 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 low, high, high. What I wanted to do was I wanted to take the market there because of the H4 downtrend. Okay. So I waited. I waited for the market to trigger beyond that. Oh, sorry, break below that last week's low. It did. And then I shorted that high. I got stopped out. Okay. So the trade kind of looked like this. Trade looked like this. Didn't work out for me. Yes. This trade is a fundamentally incorrect trade. Let me tell you why. If you're playing range, right? If you're playing from range high to range low, right? In this case, if I draw a line from the range low, from the left of the range low to the right, you can see that the market has hit the range low. So why are you shorting a range low bounce is my question to myself, obviously. Fundamentally incorrect trade, very poor planning, and on top of that, we entered and exited this trade multiple times. So I'll show you how emotional I was this week. So Euro GBP, Euro GBP, Euro GBP. Lovely. And it's all sell, by the way. You can see sell, sell, sell. Just hell-bent on selling the market, which is actually bouncing from range low. Think about what kind of a state of mind I was in. Completely bullshit execution from my side. Very, very uncharacteristic. Not uncharacteristic, but very, very sort of unexpected. From a trader who's been trading for almost 4 years now, doing stuff like this. Unacceptable. Absolutely unacceptable. Next one is a Euro USD play. We'll come to silver later on, but we'll go to Euro USD first. Now, Euro USD, in my opinion, was an A+ setup. Okay. Euro USD, in my opinion, was an A plus setup. Why was it an A plus setup? Well, quite simple. Hard downtrend, open of the week, puts in a local high, then a lower low, low high, lower low. Clean break and hold below the last week's low, so we target the last week's 1.2x extension, which also turns out to be a monthly extension. I don't know which one. Okay, it's this. So we have got two level confluence there. So what I do is I go short there, right? Again, I short a local high sweep, so I short there, and my stops are there because at this point in time, definitely you're expecting the high of the week to be in, and you are targeting that. That doesn't work out for me. You can see, and even though it's deviated and come back below the last week's low, I would not go for this trade personally. Simple reason, market structure reversed. That's where we had the first sign of reversal, then we have a test, consolidation, and this is where it actually reversed. Unfortunately, that actual reversal was my stop hit. And then it also makes a high low and a high high. So we now have a bit of an uptrend establishment on Euro. So I wouldn't really go for this trade, but goes to show that this was an A++ setup in my books. An A++ getting taken out like that, it hurts. But then again, it is the market. It is not here to please me. Not here to make me comfortable. It is there to hurt me. Apart from that, we also had an order on NZT which didn't get filled. So there was the order. When the market had a clean break below this level, that is when I placed the order. The market came back up, bounced only there, and then sold off and went to my target. After that, I didn't bother with NZT USD. AUD USD, similar thing. Didn't bounce towards the target. Okay, sorry, didn't bounce towards my entry. So it is what it is. Let go of that. USD CAD. This looks like a fill, but it isn't. Okay, because I have the orders cancelled. Why? When the market broke back above the last week's high, that is when we placed that bid. And when the market started reversing in there, this is where I pretty much cancelled my bid, because to me that was again another trend establishment. Now I could be wrong and the market could just bounce off of that and go up higher, but that's not in my books. That is not how I trade. So I'm pretty much done with currencies. Euro GBP, absolutely my fault. The chunk of loss, a huge chunk of loss this week comes from Euro GBP. Euro USD completely zero fault. A++ setup. Fact that it's gotten taken out, I don't really know what's going on with this market. So done with currencies market, we're done with DAX, and we're done with oil. Now we come on to the final one, which is silver. We're also done with Ethereum, by the way. Oh, that's a nice bounce. But I don't care. I don't really have the margin left this week to trade. That's how bad it has gotten to. Now we move on to, well, I hope I am recording, yes. So just do silver quickly and then I'll be done with it. So I cut the silver trade there, right? And then I retook it and I cut it there. So I took two silver trades. Okay, both of them have been stopped out. You'll see there. So you have two silver trades negative, one silver trade which is in positive. Okay. The idea behind silver was, again, not too complicated, but so we have this local range, clean breakout, full reset, open of the week, high low, high low, high. So any pullback in this region is a buy, and target is basically a high up there or the last week's high. Simple setup. I don't think there's anything complicated with this. The triggers are there. The trend is sort of there. The structure, are you aware of the structure? Yes, 100%. Maybe not after all of this happened, but up until this point, right, you're pretty much aware of the structure, and that's all you need. You don't really have to focus on what goes on in the depths of the week. So again, why did we stop out? Because we hit our daily drawdown level. Not the real one. The account is still kind of safe, but the one that I put in place by myself. Okay. So if I put in a daily drawdown limit of 1.6k, I have to stop at that day if I am down 1.6k. There's no way around it. And that's what happened. That's what happened with silver there. Yesterday's close on silver, which is there, is out of pure frustration. Okay, it's out of pure frustration. Just end up closing it. The trade has not yet played out. If it works out, I'll update it next week, or I'll just put it into the community tab. That how management of a very good trade has killed all the gains on that trade. Not only killed the gains, but also ended as for a loss, right? Ended as netting a loss of I think minus 500 or something USD total. So it's not good, obviously. Doesn't really feel good. So yeah, that's it for all of the trades. So we're done with silver, done with euro GBP, Ethereum we're done, oil, German, Ethereum. If you see a lot of repeated trades, they are mostly either positions that were closed later on, or the positions I opened, in frustration, and then ended up closing back in frustration. So yeah, that's the reality. I'm putting it all out in front of you to see, right? It's not like I don't care, but I think a lot of people deserve to see that not everyone's making money out there. A lot of people are not making money in trading, even though if they tell you to. And I'm not saying this because I am losing money. I'm saying this because it is a hard reality of this game that most of the times you will end up not making money. So you need to focus on capital preservation. I failed the last 2 weeks on capital preservation and obviously on that part of making money as well. Going forward, I'm not going to change anything. All right. Now you might wonder that he's making losses week in after week in. Week in, week out, he's making losses. Why is he not willing to change anything? Because I still believe my system's a profitable system. It's just that the execution definitely needs a lot of work. Not only the execution, but the analysis and the choice of trades, right? It's the choice of trades. I have plenty of trades available to me throughout the week, but it's the choice of trades, choice of asset I choose to trade is what really needs work on. So we are going to be working on that. Okay. So let's just make a note of what I want to do. Going forward next week, right, when it comes to trend, I'll keep the trend simple. So trend analysis would be simple. The structure analysis, SA stands for structure analysis. Structure analysis needs to be simple. Structure needs to come to me, right? I don't need to look for structure. Structure needs to come to me. What needs to be hardcore and spot on, right? Hardcore and spot on. What needs to be hardcore and spot on are the triggers, right? So these are the only 3 things I'm going to focus on next week. Simple trend, right? It needs to come to me simply. I don't have to look for the trend again and again, right? Structure analysis again needs to be simple. If it's a range, it needs to show that it is into range low, so I'm going to buy it. It needs to show it's in a range high, so I need to sell it, right? For me to sell it, triggers need to be hardcore and spot on, right? Very strong triggers, or else we are not taking the trade. Going forward, just going to focus on these 3 things, right? One example of that is EG. I'll show you in EG what I mean by doing that. What I mean by all of that. So simple trend, all right? In case of EG, if you look at the H4, it's far from simple. It's just a range bound market, okay? So trend up there is down, but then once it comes starts to range, right? So it's a down plus range trend on the H4. On the H1, it's a range trend, okay? It's completely range. It was down, then you can see that it actually made a high there. Attempt of a high low, keeps on grinding, so that's a range. So in case of EG, we didn't have the trend with us. Why I say that we didn't have a trend with us? Because we wanted to go short, but we do have a range environment, a very hardcore range environment. Then that brings me to structural analysis. Now, according to the structural analysis, I said that basically it is in a range. It's coming from a range high, so it needs to go down towards the range low. So I end up shorting there after that bounce. Now I already told you that it was fundamentally incorrect, because according to structural analysis, this is your range low. So you cannot be shorting there. You cannot be shorting a range low bounce. So on the structural analysis front, EG is an incorrect trade. On the trend part, EG is a 50-50 trade. On the structural analysis part, EG is a completely incorrect trade, right? Now let's come down to the final one, strong and hardcore triggers, okay? So weekly open to the range low, previous week's low is already done. After that, I've said that I need a clean break and close below the last week's low. I prefer 3 candles. How many candles do we have there? 1. Triggers are not even there. Forget about hardcore and, solid triggers, right? Forget about hardcore and spot on triggers. The triggers in this case, in case of EG, are not even there. Yet I've taken the trade. I've not taken this trade once. I've taken this trade 1, 2, and 3. About 3 times. Think about the, I honestly, I find it hard to put it in words. The quality of performance that I have delivered this week, extremely unacceptable, shameful on the standards, my standards. 4 years into this game and you trade like this, it's completely unacceptable. So yes, going forward we'll be focused on these 3 things. I will drop down the risk a bit because we are low on margin on this 6-figure account, but then most of the things are going to remain the same. Focus is going to be on the choice of trades and choice of assets more, and then we'll move to these 3, and then only then we'll take a trade. Okay, so that's it for the wrap up of the week. Thank you for watching and bye.